Hello and welcome to another episode of Nothing Ventured with me, Aarish Shah. Today I was really excited to have with me via Zoom Dr. Tanja Emmerling. Tanja is a partner at High Tech Gründerfonds, HTGF. With over a decade of experience at HTGF, Tanja heads up the Berlin team and plays a pivotal role in digital tech investments. HTGF has become the most active seed investor in Europe, managing a diverse portfolio of technology-driven companies. Tanja's journey into venture capital, combined with her deep understanding of the German tech ecosystem, gives her unique insights into the state and future of venture in Germany, Europe, and beyond. In today's episode, we talk about the lack of tax harmonization stifling early-stage investment in Europe, how Europe has to hurry up to be attractive to founders, and why Germany is a combination of decentralized hubs for tech and the benefits of growing in a dense ecosystem.
The ecosystem much more elaborated around them.
How Germany's strength in B2B will help find the right use cases for AI, and the pressure to innovate is real.
These traditional companies are under such a great pressure right now to innovate themselves, to make the pivot themselves, to find the future technology.
Why the big checks are still missing in Europe, and how they're still coming from the US.
Anything like 20-30 million and beyond, the big checks still come from the US.
Why it still makes sense to launch a startup in Europe versus just starting in the USA from day one, and how HTGF created a public-private fund structure in the aftermath of the dot-com bubble collapsing, and why it works.
We need to have investments in technology.
Tanja's contrarian conviction: do not waste other people's time.
That's really something it can really drive me crazy.
Let's get straight into it. Hey guys, whilst I've still got you for a second, I thought I would just reintroduce myself. My name's Aarish. I'm the host of Nothing Ventured, the podcast where I talk to the people behind the stories that make the tech and venture ecosystem go round. I'm also the founder of Emerge One, a consultancy that provides fractional CFO support to venture-backed tech startups from seed to Series B and beyond. If you enjoy the podcast, we'd love for you to rate, like, and subscribe wherever you listen. And of course, if you have any comments or recommendations for guests that we might want to bring on, please do feel free to reach out to me on LinkedIn or Twitter. I'm always available. Let's get into it. Tanja, really great to have you here today. Thank you so much for joining me.
Very happy to be here, so looking forward to it.
Excellent. Well, I think, as I mentioned kind of to you earlier, you're probably the first guest that I've had on from a venture perspective with a focus, a very core focus in Germany. And so I wanted to explore that a little bit, right? So in the context of investing in German companies, there's often mention of the notary process, the administrative hurdles, and I come across this all the time when I'm speaking to UK-based VCs and especially angels who want to get in early stage into a startup, but get frustrated by the processes and who would otherwise be investing in German ventures. So can you elaborate on how these factors, from your perspective, impact the speed of investment, and what changes, if any, are being implemented to maybe streamline this process? And what would you ideally like to see to improve the German early stage ecosystem?
Yeah, I think from an angel perspective, it's not only the bureaucracy, it's also that Europe is not tax-wise really harmonized. And so, I think it's difficult to jump from one country to another because you don't have the same incentives there. So, but from the bureaucracy, I think it is actually a topic. It is, as we see now, all with the market changes, that also the discussions in the US that you have, that it's quite a hurdle. And we have also from the startup associations, so they always come back with the topic that it's quite a challenge for young startups to have all the bureaucracy just to found a company and then driving through the different investment rounds. So I think the notary is really a special thing about Germany because you always, with every investment round, you have to go to the notary and the shareholders have to be present and sign it there. So that's quite awkward, I think, for other countries. For us, for instance, when we invest in the US, then it's quite strange. So you just get the note from the lawyer say it's done, and you think like, well, it's really done, and then you're waiting for the certificate to come. And if you go to the notary, you are sure it's done. It's just registered. So I think that's just that's just the way you feel about it. But I think it's a hurdle because you need to get them together. You need the processes, you need wet ink and stuff and so on. So that is the challenge, just to organize it. And so that's something that you probably, when things go very fast, you don't need at that moment in time. I think so. There are many restrictions for that, from starting from anything from reporting that's getting more and more difficult, with all the regulations in the European Union, and going to the processes. So it's not easier founding a company with all that you have to think of. So because you need an extra person that covers everything from ESG regulations, whatever you have to report, just to get that done. And that's what things you don't need at the beginning, just to challenge the company.
Yeah.
And start. So I think that's really will always be a hot topic, getting that down, just to make it easier for the early companies just to get started.
Yeah. And I mean, from your perspective, what would you like to see change, or do you think that there is change coming? So, I mean, I always think about, there's been this, well, certainly last year, this big push for, e-acceleration, and Andreas Klinger has been talking about EU acceleration, and he's been talking about it from the perspective of having a Europe-wide company structure, so that you don't have to set up a limited company in the UK, let's say, and a GmbH in Germany, or an SPA in Italy, but actually one harmonized system there. And the second thing he talks about is also just making sure that founders speak English, which, is quite surprising to hear, given, I think, a lot of the pride, and correctly so, that obviously European countries have in their own languages. But again, from his perspective, he's thinking about it more from allowing for that homogenization of that sort of startup ecosystem. I mean, what are your thoughts, I guess, on that, or any changes that are coming through in Germany, or what would you like to see? What do you think would make the biggest difference?
Yeah, I think it starts with very small things. So like digital signatures, for instance, so it makes it more easy to talk to work internationally. Also, if you have shareholders that are international, so that starts with things like that. Then, of course, the legal structure of the company, so everybody has the same understanding. So what the requirements is, that makes it a lot easier. And then to have maybe easier reporting standards for the younger companies in Europe, so they can work easier and set up the company easier. I think these things that are structurally, so they have a good legal format, probably, that they can easier work in, then it can transform it in a later stage when they are ready. After a certain growth at a certain point of time.
Yeah, I mean, I think, and this, I don't think it is a problem that is going to be solved quickly, right? Because part of that requires not just political union; it requires legislative union, right? There has to be an element of decentralization of member states' autonomy, right? Which, of course, famously is, in theory, one of the reasons that Brexit happened here in the UK. And my guess is that many would fight against having legislation coming down from the EU downwards that says, well, actually, from a startup, or if you're talking about incorporating a new business or something within the technology sector or whatever, we've got a whole new sort of standard, and actually the legal process will, be, the jurisdiction will be somewhere other than your home country. I would imagine that would be quite difficult to achieve in Europe as we stand today, which is, I guess, one of the reasons why the US is attractive, is because whilst each state sort of does operate separately, everyone understands that if you incorporate in Delaware, this is what the legal standing is. This is, these are your rights, your obligations. These are the recourses that you have, and it's just a lot easier, to manage with one entity, or one well-known kind of common law, if I can put it that way, compared to what we have in Europe, right? And because the flip side of that is, presumably in Europe, lots of companies, outgrow their home country quite quickly in terms of market, etc., right? Because whilst the EU has, up close to half a billion people, that isn't a homogenous market, right? From that perspective.
Yeah, exactly. So we also have couple of companies that make the flip to the US, and then so it's a question at which point of time it's reasonable to have it in Delaware, or should you always have one to operate within the US, for instance, to get your market on the ground, because it's always important if you want to grow there, you need to be there with the customers. The customers require an American corporation, and if you want to have then larger shareholders or larger investors on board that come from the US, it's probably easier to manage them through that legal entity. So I think, yeah, it's a question of growth for the companies later on. I think like internationally, also US investors has become much more at ease with the German GmbH, for instance. I think everybody learned internationally how different legal formats were. But I think it would make it much easier if you had for the concept of startups, probably one thing they could start off. And so you have same standards where they start working on, and then you can know how to transform that into a different legal standard probably later on in time. So I think both has advantages, disadvantages, but I think like thinking it forward, how to make it easier for them to start off.
Yeah, I think that's exactly it. And I mean, look, realistically speaking, it's a constantly evolving market, constantly evolving situation. Over time we may find, the magic fix, but for the time being, I guess we are where we are. I wanted to kind of change tack and maybe zoom into Germany a bit more specifically, right? Because the tech ecosystem in Germany is notably decentralized. You have hubs in Berlin, Bonn, Munich. How do you think about and break down that kind of regional diversity, and how does it kind of contribute to Germany's strength in specific tech sectors? And where do you think Germany holds a specific competitive advantage, I guess, in tech, either regionally or in Europe, or even more broadly on the global stage, right? Because when I think about Germany, I think about high precision engineering, we think about vehicle manufacture, et cetera, et cetera. But from your perspective in technology, where does it have those strengths, and how do those strengths split out sort of regionally?
Yeah, I think so. What the main difference is probably that we don't have these centralized hubs like Paris for France, London for UK. So we have a lot of different hubs that have their strengths. So the biggest, largest is still Berlin, because like international investors come here. It has the biggest growing ecosystem for startups here. So and they are the most diversity. It's most attractive for international people if they work with startups to come here. So grow their companies is very easy. But you have other hubs like, for instance, Munich. There are a lot more corporates around. So that's a different focus for maybe pharmaceutical focus, or for instance automotive focus. So they are close to the customers there, and it gives for industrial tech companies, for instance, a different environment and a different ecosystem. You have others that like Aachen, which have strong tech-driven or hardware-driven universities with a lot of spin-off. And you have other places who invested a lot, like all the North Rhine-Westphalia, for instance, who invested a lot in their regions to have more spin-offs from universities. So you have a variety that's close to the industries that are locally in that market. And I think that makes it very interesting for Germany, because you have hubs also where different industries from the Mittelstand are around. So that's the possible customers. They can start off and they have the expertise close by, and so help them grow in first place. So I think that makes it very interesting in Germany to have these variety that's all across the country. But because we are a federal state, I think that comes a bit from that history. So we're not that centralized politically, so they have the chances to grow out of the hubs. But still, I think it's an advantage for the startups that start in a hub, because the ecosystem is much more elaborated around them, and it makes it easier to get the employees to exchange whatever happens they need from the knowledge to form their rounds, for instance, and stuff. So I think it's easier for them to grow within a dense ecosystem in the bigger hubs like cities. But still, the expertise can lie elsewhere in the country, especially like for life sciences or for really science-driven hardware, something. They are usually there where the science centers are out of the country somewhere, so not necessarily in the hubs. So you have, it depends a bit on the startup where they best be placed.
Yeah. And so I guess from, again, from your perspective, what are the kind of technology themes in Germany that are becoming more prevalent at the moment? Or is it very sort of similar to the rest of the world where AI is, AI, life sciences, deep tech, seem to have been more in favor over the last several years as well. But do you think Germany has very specific advantages in any particular sector? And what are those sectors?
Yeah, I think first of all, yes, we're following all the trends that you see in the internationally. But I think like the traditional of Germany is the hidden champions in the production, in the B2B sector. And I think like that's why Germany also for startups, I think it's a good place for B2B startups. Not that much the B2C that need a lot of money and a lot of scaling out of it. We think like B2B is our expertise. And probably if you're thinking like topics like AI, it's probably not to invent the next new algorithm and having the big data that China has. But I think what we could be very good in is finding the right use case, because we have the hidden champions, the Mittelstand, and especially the customers who are innovating and can integrate the new innovations, and then finding the right use cases to start from there. I think this is the point where we really can have the expertise that's then on a technical level that you can roll out in the world.
Yeah, so sort of looking at it more from the picks and shovels perspective than the core kind of LLM stack, if I can put it that way, right? So essentially finding, and I mean we find this all the time, right? And we're seeing this at the moment where lots of businesses have sprung up using generative AI, using LLMs, etc. But the question is, well, why, right? What are they there for? Who are they serving? And I guess that comes back to, your point. And I think that it is incredibly important being close to the customer base, to your point, dense ecosystems, being close to those customers, those potential users, being able to really understand, what are the problem sets that they face and what are they currently using to solve those? And does AI actually play a role in making those solutions more efficient or better, or changing the solution altogether? I think that makes a huge amount of sense.
And also, I think like these traditional companies are under such a great pressure right now to innovate themselves, to make the pivot themselves, to find the future technology. So they get more and more open to work together with startups, together on the use case. So if they can't do it, but then having the partners outside of it. And I think it's a big chance. So they have, and they also sometimes they're changing generations. They're much more open for the way they work, the way the startups work. So I think like it's really a chance of getting them together and working forward into new technology, because like the pressure on the traditional industry has gotten so high.
Yeah, I mean, it makes a huge amount of sense. And I guess that kind of leads quite well into my next question, right? Because one of the big challenges we see in Europe, and again, we've talked about this on this podcast probably too much, but it is a reality. And this is the challenge of the exit landscape, right? Particularly the limited IPO market. And equally also the fact that we don't have the sort of size of companies that you have in the US that, that potentially have the balance sheets in order to acquire some of these startups at attractive valuations. So where do you see the larger funding rounds and exits for German companies coming from? And how do you think that affects the growth trajectory for those startups in Germany in the long term?
Yeah, I think we all talk a lot about that. So the big checks are missing still. So anything like 20, 30 million and beyond, the big checks still come from the US. So if the company is really searching for higher money, so you need the international investors, and usually investors also that coming from the US.
Yeah.
So still that's the case. So even though we have a lot more funds that have bigger possibilities to invest at a larger scale, still we are pretty much reliable on the investors coming from outside. And then still, what's the perspective? So who would be the buyer? So do we have the buyers that are willing also to pay the price that you can achieve internationally? Probably the larger buyers still will be in Asia or in the US, if you say them. So the companies prepare for that international market also to attract those buyers. So in that way, we're still a bit limited. And also, I think big part is the IPO market. So we have some opportunities in the Nordics with Nasdaq North or something like that. So they have smaller IPOs, but still the IPO market is not very developed in Europe. So you will tend to go to the US as well. So that's quite a limit. So if you're thinking about scaling the company, so at which point you have the possibility to make it really unicorn-wise and then getting the buyer within Europe, I think that's still a bit limited. If they want to go, if you want to scale large, then you need to make the jump.
Yeah, and this is, I mean, this is a problem that I haven't yet gotten my head around fully, right? Because I guess the question I constantly pose to myself is, if you are building a business that is looking to secure venture, and therefore the outcome that you are aiming for is a large outcome by definition, right? If you're raising from venture, then you are looking for a substantial outsized outcome. I just wonder why founders don't set up day one in the US and treat that as their first market. I mean, obviously that is minimizing the complexity a great deal. But in my head, I'm sort of sat there going, well, if I know that the larger pools of capital, well, if I start at seed, right? Pricing at seed in the US is going to be better than pricing in Europe. I know that the deeper pools of capital are going to be there later. I know that the market is more developed and the consumer market is larger. And I know that my exit opportunities are going to be better. I'm not suggesting that you answer this question, but like the question in my head is, why not day one de facto just launch in the US and, that's what it is? Because what are the benefits for a founder launching in Europe today? I mean, okay, access to, I think, to your point, some substantial industries and expertise. Yes, I appreciate that. Secondly, maybe research and the university kind of side of things. There's obviously strong linkages with the tech sector from those higher education institutions. But once you get beyond that, from a commercial perspective, from a valuation perspective, from an exit perspective, it just feels like the US is simpler. This is the problem that I keep coming across in my head.
Yeah, I think it depends a bit on the business. So do you understand really the market there better? Do you have better access? Do you have the better relations and connections to the market that you need? Or do you have a specific niche probably that you can cover for an industry? You get better access here. Or you can be very attractive if you are able to cover the European market, which US investors always have difficulties to understand. The European market is complex in so many countries, so many languages. Everyone works differently, so it's really hard to tackle from outside and think like within or from within Europe. You can do that very well. Then it can be attractive, making the jump afterwards because you are able to cover that. So I think like operatively, there are a lot of reasons that you start that way and not competing with someone who is like native US and understands probably this market better and has better connections. But I absolutely agree. If you're a founder and have like a product that is really independent from that aspect, then why would you go for the smaller one if you can have the bigger one? So it's the reason why Europe really has to hurry up to be attractive for founders, because like all that we have is the brains and the energy and the capability of people who set up companies and really drive the economy, and we dare to make them the offer that this is a good foundation here in a good environment where they can set up the businesses, yeah, we might lose them early on. And I think so we have to really be attentive to that.
Yeah, I think that's exactly the point. I think there are lots of positive things in Europe. There are lots of positive things for sure. But right, the risk is there. I mean, one of the things actually interesting, I don't know what it's like in Germany at the moment, but you know, a lot of the companies that I certainly work with here in the UK are finding that, you know, that their talent is, you know, the sort of wage levels for talent here in the UK and Europe probably more broadly is so much lower than it is in the US. So like, you know, the obvious one is engineers in the US getting paid upwards of $500,000 in some instances, whereas, you know, we seem to kind of cap at 150,000 sterling, let's say. So that flight of talent will happen, is happening, has happened. And I think, you know, there's always this, at the back of my mind, there's always this phrase that I repeat to myself, which is, you know, where capital flows, talent will follow, and vice versa, right? So if the talent goes, capital will follow it, and if the capital goes, then the talent will follow it. And those two things are just intrinsically linked. And in fact, you know, lots of second-time founders that I know here in the UK have de facto built their second business in the US first, or with a US first mentality, even if they are building, you know, even if they have a team in the UK or Europe or whatever, their mentality is still, well, the US is, we know from our first experience that the US is where we're going to have the better and bigger opportunity ultimately. And so they, you know, they build sort of US first. And I agree. I think, you know, Europe has to figure this out quickly, because I think, you know, if we go further down the path of regulation, which is clearly happening, you know, both in mainland Europe as well as in the UK as an example, then there will be more and more reasons for those startups to say, well, actually, US is just much more attractive for me to go day one. And you know, if they go, then the cash will follow them.
Yeah, I think we had an interesting development, like for US gotten politically a bit difficult. Brexit, you know, got out of Europe, and then we had somehow a wave from an Indian community that was coming into Germany that was growing, which was great for all the IT and software companies, so they got access to new talent, you know. So you never know where it's moving, but I think like this is something you have to offer, make it attractive. And that comes to the first point that we had, like to make it more accessible by speaking English, you know, getting standards that are accessible for international people. I think that's things we have to work on. So they just support them to get access to this kind of human resources.
Yeah, I mean, it's interesting. I had someone on the podcast a while ago who has built, Rishabh Kaul, who's built a community for Indian entrepreneurs in Europe. And a lot of them are in Germany, and a lot of them are in the UK, of course, as well. And one of the things he said was, you know, one of his questions almost was, I wonder how many of those entrepreneurs chose to come to Europe versus came to Europe because they couldn't get a visa into the US, etc. Right? So is it just a stepping stone, or is this the core kind of hub where they want to build their businesses? And I think that's an interesting question. And of course, that will come down to how attractive the environment is, how easy it is for them to maybe gain citizenship, etc., etc. And obviously, yes, to your point, politically, I mean, the whole world is politically in a bit of a mess at the moment, certainly from my perspective. Maybe not everyone sees it that way, but I think, you know, these questions will become harder and harder to answer over time, especially as countries become a little bit more nationalistic and borders become tighter, which is obviously, you know, what we're seeing across Europe and the US in terms of rhetoric. So it'll be interesting to see how that plays out for sure.
Yeah, and that makes it easier again for the startups that are in hubs like Berlin, because like here it's easier to live for international people. Everybody speaks English. You know, there's a large international community, so it's much easier than being somewhere on the countryside, which has maybe a great tech stack. You know, is super interesting, like professionally, but there's no environment that makes them for them easy to integrate, you know, in society and develop their lives as they wish to have. So So that's challenging, so that you don't have that single hubs in that. So if you want to have that resources.
Yeah, no, completely understand. So moving on, maybe talk about HTGF a little bit, because the fund has a unique structure in that it includes both public funds as well as corporate LPs. So can you kind of elaborate on why this public-private partnership has been so successful, especially given that there's often been pushback in the about the public sector getting involved in early stage investing. And certainly here in the UK, we see lots of comments around, the future fund that was raised during the COVID period, and British Business Bank getting involved in investing in early stage emerging manager funds. So I'd love to understand how the profile of your LPs also influences the fund strategy and portfolio construction.
Yeah, so the idea of the fund was basically born back in 2005 after the dot-com disaster. And Chancellor Schroeder at that time said, we need to have investments in technology, but do that according to the market. So he was partnering up with companies like Bosch and other big players to say, let's set something up like an investment fund, but really to market terms. So that was the initiation, and it went very successfully. So over the time now we have in the fourth fund generation, first we had 8, now we have 45 corporate investors on board. And that's because corporates understand more and more their strategic impact if they have the chance to look early on in the market, what happens there in innovation, where is the market driving, what's new coming up. So they themselves in their core business don't have the chance to drive those things, but they have the chance to look at it and also invest in it. And in the time these startups develop, they can see if they have themselves investment opportunities or later on opportunities to buy those companies. And so that was quite successful to have also the broad range of technology that we are following. So it's not only a specific technology that might be corresponding to the core business, but also to look at it in the wider range. So from HR tech or from compliance tool or something like that. So the company really can look holistically and what can you change in your processes or what's to work and what's needs to be innovate within the company. And I think that makes it very successful that you can cover the entire range of the company within the different industries in that space. So that's quite successful public-private partnership that worked over so many years. And I don't know many countries that really manage that over so many fund generations to work together. But that is because we are managed by market terms. So to have a public investor on board limits us basically just to the obligation to invest in technology early on and taking the risk, and that we are limited, that we get into seed up to 3 years, but that's basically it. And the rest is working like a VC. And I think that's the success factor, that we are not beyond that so restricted to have it, so.
Yeah. So as an example, because one of the things around, lots of public funds is geographical restrictions. So, but you guys invest, I think, 30% Germany, but balances rest of Europe, UK, and even some.
So we work primarily in Germany, but we can do 30% international.
Oh, sorry. Okay. The other way around. Okay.
Yeah. A lot in Switzerland, of course, in the pharma sector. We have in Belgium and UK, Italy, so yeah, quite a range. So when our companies grow larger, they are also able to flip to the US or set up in Delaware, so that's no problem. But for the first place, we also want them to be operative in Germany, so they have some strategic link to Germany, but beyond that, it's just the market.
Yeah. And the corporate LPs, so talk me through, do they get co-investment opportunities, or do they just principally invest through the fund and that's it? Because I guess the question in my head is, or the difficulty might be that if you have a corporate LP that is investing essentially for deal flow for their own sort of M&A corporate development activity, then bizarrely, or not bizarrely, right? So on the one hand, obviously as a fund, you want to return large amounts of capital, right? You want outsized events, as we talked about earlier. But equally, if you're a corporate LP and you're looking at it from an acquisition perspective, you want valuations to remain relatively sort of held down. So how do you circle that square? Or is there just a very sort of specific Chinese wall between the fund investment and what the corporates do outside of the fund?
So the trigger is they see the investments we invest in. So they know the companies very early on. They don't have a special right that they allowed to invest that same, but they see them early on and then give them the chance to partner up with them early on, make corporations, and then if they have the chance to invest, to probably get in, but they don't have any preferred rights to do so. And the same is for exit, but usually the companies in the beginning are too small for them. So it makes sense for them to see them grow and how they develop over the time. And then they're really in the later stage. Then it's getting interesting also to speak to strategic partners. So then it's interesting to see if get them along or even get them as a buyer. Especially interesting for companies that are more in the pharmaceutical market or drug development, for instance, who require large amounts of capital, and then later on they have very limited partners in that space who can buy or would buy. So that is really an advantage for them. And the other way around, for the startups, if they meet these corporate investors, for instance, we have an investment committee where they present. So that's the first chance for them to set up corporations, to also get them know them as customers. So they can form a relation, and if out of this relation later on there is any kind of investment or a scenario where there would be a buyer, they get the opportunity, but they don't have preferred rights to do so. So that keeps the company safe, that they can perform on the market. And also, neither the government nor the corporate have any strategic influence where we invest. So that keeps us independent. And that's absolutely necessary that we can really have best performance for the startups.
Yeah. So essentially what you've created is an ecosystem where the startups have a large viable user base, if I can put it that way, or a potential customer base, and they can test products, etc., with those corporates where there is a linkage, and presumably there isn't always a linkage with your corporate LPs, right? So there will be businesses that you'll invest in that aren't specifically aligned with any of those corporate investors, but it doesn't mean that there is a de facto right, exactly as you say, for those corporate investors to get involved in the business outside of the normal commercial terms. And because they're not also shareholders directly on the cap table, that sort of level of separation is maintained.
Exactly. But it's also it's an advantage especially for the B2B startups if they get early on feedback, because like sometimes you don't understand how the procurement and whatever works in a company, and so it's good to have feedback after a former corporate says, no, that will never ever work because we think this and this way. Of course, it doesn't work for them because they think that way, but the things you have to tackle with, that gives you an idea what you have to tackle as early on with the customers. So that's things always interesting in the committee.
Yeah, and really valuable. And I know that from experience, because I was just talking to a B2B insurtech yesterday. And they spent last few years building the product, and the last year really trying to get it to commercialize, and are doing incredibly well. Like in Q4, signed some very strong deals, but that was a learning process, right? Like, the amount of time it takes to convert those deals, the sort of hoops that you have to jump through. If you have early access and someone friendly that is able to give you that kind of guidance and advice, it just means that you're going to be much better prepped when it comes time to start selling your product or service into those companies. Tanja, this has been an incredible conversation. I have one final question for you, which I ask all my guests, which is there one thing that you have a contrarian conviction about from any area of life, whether that's work, politics, socially, or at home? What is the hill that you would die on defending?
Oh, wow, that's really a huge question.
Yeah, I know.
Never really thought about it. So, but I can think you could drive me crazy if someone is wasting time or being late for nothing. And that's quite difficult sometimes in our job that we have so many things going on. You always have to shift meetings. So we experience that from one way to another. So, and I'm always thinking like that 24 hours for everyone. So don't waste it for the person that's waiting for something. And so that's really something it can really drive me crazy. And but you have to live with it anyhow.
Yeah, I mean, sadly, I think we've all been we've all been either the receiving or the giving end. But I think there are people that are chronically abusers of other people's time, and I think that becomes that becomes quite annoying over time. I fully agree. I mean, I think you would hope that people would respect your time in the same way, and therefore it is courteous to do the same back. And actually, I think over the last several years, I've become much better at a personal level of respecting other people's time. Not that I didn't respect their time earlier, but I'm just really conscious about how much it annoys me, and therefore, I do my best not to do it to anyone else. So, yeah, I completely, I think that's pretty spot on. Tanja, thank you so much for such an incredible conversation. For our audience, where can they find you online? Are you on LinkedIn? Are you on Twitter? Where's the best place for them to find you on the internet?
I'm on LinkedIn. You can come through our website and just reach out and there will always be an answer.
Amazing. Well, thank you so much for joining me. I really appreciate it. It's been absolutely fantastic.
Great. Thank you.